How can we make money together with Donald Trump? I believe this is a secret that many people want to know. Today, I will use a real case to do an analysis and lead you to uncover this secret. To understand the whole story, we need to start with the Trump administration's investment in Intel. On August 22nd, the American chip manufacturer Intel announced an agreement with the federal government. The government would invest $8.9 billion into Intel common stock, purchasing 433,300,000 shares at the price of $20.47 per share. This represented about 9.9% of the company's shares. During this period, Intel's stock price has risen a lot. But once you understand the truth behind this matter, you will see plenty of huge investment opportunities, because Trump's target is not limited to this one case. Back in March, I bought Intel shares at a price of less than $20. By May, when Trump visited the Middle East with NVIDIA CEO Jensen Huang and AMD CEO Lisa Su, but did not bring Intel's new CEO Lip-Bu Tan, I realized that Intel might have problems in handling government relations, so I sold my Intel stock. Later, on August 8, Trump stated that Lip-Bu Tan should resign immediately. This news confirmed my suspicion. But then, something strange happened. On August 14, Bloomberg released information that the U.S. government was preparing to invest in Intel. On August 19, U.S. Secretary of Commerce Lutnick confirmed publicly that the federal government planned to exchange subsidies related to the CHIPS and Science Act for Intel's shares. Only 3 days later, both sides finalized the agreement. The federal government acquired about 10% of the troubled chip giant Intel, becoming its largest single investor. The efficiency was astonishing. By the time I reacted and bought Intel shares again, the price had already risen to $25. On September 18th, NVIDIA announced a $5 billion deficit investment in Intel, and the Intel stock price officially broke through $30. Why is this deal worth paying attention to? On the surface, this seems like only a capital transaction, a simple replacement of shareholders. But in fact, the strategic intention reflected in this deal is far deeper than what appears on paper. It concerns the future destiny of the United States and how America will reshape its voice in the global technology supply chain. Now let us look at the details of this transaction. According to Intel's press release, $5.7 billion came from CHIPS and Science Act subsidies that had already been approved but not yet allocated, and another $3.2 billion came from the Department of Defense based on the Defense Enclave Services DES program commitment. In other words, funds that were originally subsidies or grants were instantly turned into money, used to buy equity. The U.S. government essentially did not spend any real money, yet it obtained about 10% of Intel's shares. Regarding this, Trump proudly said on social media, "The U.S. government did not spend any cost to obtain these shares. They are now valued at about $11 billion. This is a great deal for the U.S. government, and it is also a great deal for Intel." The brilliance of this arrangement lies in converting subsidies into shares, allowing the Trump administration to gain a huge advantage at no cost, while Lip-Bu Tan relieved the government pressure. More importantly, Lip-Bu Tan opened up a brand new path for Trump, letting him discover a quick way to obtain big company equity out of nothing. The U.S. government's investment in Intel is truly a win-win. For the government, the CHIPS Act funds were originally subsidies. Trump converted them into equity investments. This means the U.S. government gained 10% of Intel's assets and rights without spending. The Trump administration scored a major victory. In addition, the CHIPS Act list not only includes Intel, but also companies such as Micron Technology and Texas Instruments. They also received large subsidies from the Act. If their subsidies are all converted into shares, it would mean handing over more valuable equity to the Trump administration. Trump has not hidden his ambition. On August 25th, Trump publicly boasted on social media about the government's investment in Intel. He said, "About Intel's share deal, I did not spend a single penny. Its value is about 11 billion US dollars. All profits belong to the United States. Why would foolish people be unhappy about this? I will make such deals all day long for our country. I will also support companies that can make such generous deals with the United States. I like to see their stock prices rise, making America richer, creating more jobs. Who would not want to do such deals?" This statement by Trump actually revealed very clearly the purpose of his investment in technology companies. Why does he want to become a shareholder of these companies? Because it not only gives him influence in these enterprises, but also brings real financial returns. The US stock market has risen strongly over the years, and many investors have made money, but the US government had no share in it. Now things are different. For example, in Intel's case, the Trump administration bought 433,300,000 shares of common stock at $20.47 US per share. At the time I'm writing this, Intel's stock price has already exceeded $33 US. That means in just over 1 month, the government already earned more than $5 billion US. In the future, when the Trump administration helps Intel expand business and open new markets, its stock price will perform even better. The US government will enjoy even more benefits. And do not forget, after becoming a shareholder, the US government can also receive dividends. More importantly, this time when Trump bought Intel's shares, he also unintentionally opened up a channel to solve America's huge debt problem. Trump's approach is like building a bridge between the federal government and large enterprises. In addition to taxation, the federal government, as a shareholder, can also enjoy dividend benefits. For a big company like Intel, this is also extremely beneficial. First, joining hands with the US government makes it easier to raise financing. Why has Intel been unable to compete with TSMC and Samsung? One reason is that its technology is relatively behind. Another reason is that semiconductor manufacturing is a typical heavy asset and high iteration industry. It requires continuous and sufficient capital investment. For example, when TSMC built its 2nm factory, the investment was more than tens of billions of US dollars, and later it still needed upgrades to the production line. But what Intel lacks most is money. By the end of June this year, if you subtract capital expenditure from operating cash flow, Intel lost $45 billion US over the past 3.5 years, including a loss of $6 billion US in 2025 alone. Under such enormous cash flow pressure, this year Intel again postponed the launch date of its Ohio factory, and it also announced a large-scale layoff plan. The delay of the Ohio plant not only damaged market confidence in Intel, but also undermined Trump's manufacturing return plan. This was fatal. In other words, even if Intel is not competitive enough, Trump still has to find ways to raise funds for Intel for the sake of his own political achievements. This time, when he publicly invested in Intel, he was actually supporting the company and sending out a very strong political signal. With the US government backing Intel, the company would never easily fall. For capital markets, such endorsement is more attractive than any financial report. Thus, after the rumor that the US government would invest in Intel, on August 19th, SoftBank quickly announced an investment of $2 billion US in Intel. On September 18th, Nvidia spent $5 billion US to buy Intel shares. These were not only investments, but also attitudes. Following the US government's bet would never go wrong. Even more importantly, letting the US government buy shares is far smarter than Intel issuing new shares on the capital market. Right now, Intel's stock price has already fallen to the bottom. If it suddenly issues new shares, not only will the financing efficiency be low, but it will also directly dilute shareholder equity, which means hurting older shareholders. At best, this will trigger dissatisfaction in the market, and at worst, it may lead to selling pressure. Therefore, This is not only financial support, but also political endorsement. What the market sees is not dilution of equity, but the attitude of the US government. The atmosphere easily shifts from panic to pursuit. The second benefit of the US government investing is that it can help the company open up markets. Lack of customers has also long troubled Intel. In July, Lip Bhutan warned that if the company could not obtain orders from major key clients, it might even have to withdraw from the foundry business. From this, we can see that Intel's situation is already very urgent, almost at the point of shutting down business. However, with the US government as a direct backer, both sides share direct interests. Many government projects can then legitimately be given to companies in which the government owns shares. The Trump administration always favors large companies with promising prospects. Giving related projects to them cannot be criticized. Moreover, if Intel and other companies participate in market-based bids, including international market bids, would large economies like the European Union dare to casually tighten regulations or impose huge fines? Because now the Trump administration has become Intel's major shareholder, to oppose Intel would be to oppose Trump himself. With such benefits, it is actually not difficult for Trump to obtain shares of related companies. Enterprises rely on the US government as a giant tree, ensuring their safety. Therefore, this idea will be widely applied to American companies. Following this line of thinking, which sectors are worth Trump's investment? First, it is naturally critical minerals, especially rare earths. In the context of China-US decoupling, whenever critical times come, China uses rare earths to threaten the US. The US government certainly does not want to be long-term dependent on China. From the perspective of US national security, action must be taken to change this passive situation. On July 10th, the largest American rare earth producer, MP Materials, announced that the US Department of Defense had for the first time agreed to purchase 15% of its shares, becoming the largest shareholder. The Department of Defense spent $400 million to buy its preferred shares. The conversion price per share was $30.03. After the news came out, MP Materials' stock price soared nearly 50%, and the related rare earth stocks rose collectively. Besides MP, other rare earth companies include USA Rare Earth with the ticker USAR, energy-related company UUUU, rare metals companies API, IPX, and MB, uranium mining company UEC, and copper mining company SPX. Once chosen by the Trump administration, these companies could deliver multiple returns. In the context of globalization, these companies found it difficult to compete with Chinese firms, and their stock prices performed poorly. But in the deglobalization era, these resources concern U.S. national energy security. With the U.S. government as a backer, their value becomes completely different. This is also why my analysis often includes a lot of macro content. Only by grasping the big picture direction can we achieve high returns. This is also why my investment returns are high. So, if you are an investor, I suggest you carefully study the stocks I mentioned above. Although many of these stocks have already risen a lot recently, there is still plenty of room for growth. Besides the mining sector, there are also many enterprises in the military industry and high technology sectors that concern U.S. national security and national interest. Audiences can do their own research, because compared to simply listening to conclusions, learning how to analyze is even more important. In today's deglobalization era, investing in related companies can bring generous returns. When the destiny of the government and enterprises is so deeply tied together, success will be shared glory. I hope all of you can also dance with Trump, follow Trump, go with the trend, and gain generous returns. Of course, government investment in companies also carries risks. For example, if the government is not good at business management, it might interfere too much with corporate decisions. Therefore, if you invest in a company for the long term, you also need to pay attention to this point. That is all for today's program. See you next time.